So, Chris, we've talked a lot about owner occupied situations. Let's say we're purchasing something we're not going to be owner occupied, four
Okay.
unit, six unit, eight unit, whatever that might be. Talk through some of the programs and expectations there. Obviously there's going to be more money down, but just give us like the 101 on if someone called you. And I know there's a lot of variables, but just give the high level and we can go from there.
Absolutely. So a two property, you are allowed conventional wise. Let's just talk conventional first.
Sure.
2 unit, non-owner occupied. You can go 20% down. There are some alternative programs that will allow for 10% down. I don't suggest those because the costs and interest rates are very high on those, which make your cash flow worse. I want to do 20% down. Same thing on 3 and 4 unit properties.
Before you go on, is there a debt service coverage ratio, which I know is kind of hard on 2 units?
Not on residential. There is not. Residential, you're qualifying just as if you're buying on your debt to income ratio, and you are allowed to use 75% of the rentals of market rents to qualify.
Got it.
Okay, so that's very important to know. 3 and 4 units, Fannie and Freddie say you need to put down 25%. Okay. So there is an increase on that. Anything above 4 units is considered commercial. That's where the debt service, and that's where the actual property is underwritten before the borrower is, if that makes sense. The borrower still wants to get pre-approved. However, a bank determines the value of what a commercial property is in their mind. Okay. So if they do the cash flow, debt, the debt service ratio, they look at everything, they might say, well, this can be financed and we have a value of $800,000 on it. Well, the seller's listing it at $1 million. None says you can't buy it for $1 million, but the loan to value is going to be based upon an $800,000 purchase price because that's what the debt service value is allowing for it to cash flow at. So commercial, totally different animal than residential. Residential, we pre-approve the clients. Commercial, we pre-approve the clients still because we know your credit, financial information, but the property becomes more important to be underwritten before a commitment letter is issued than the personal property itself.